If you own Nvidia stock or you're thinking about buying Nvidia, then you need to listen to this. Nvidia just reported its full year and fourth quarter earnings. The stock is up over $130 since the release, now hovering at about $800 per share. Now, the rise in Nvidia stock over the last year has been nothing short of spectacular and astronomical. But what is behind this AI mania? Is Nvidia fairly valued right now? Should someone holding shares take some profit? And should someone even buy Nvidia today? That's what we're going to look at in this video. Not only am I going to analyze the latest earnings in Nvidia, but we're also going to have a look at the whole AI market and try to better understand where this is going and how you can profit. Now let's begin by having a look at a summary of 2024 for Nvidia. As we can see, revenues grew 126% year on year, up to almost 61 billion. Also, incredibly impressive is the expansion in the gross margin, up to 72.7% from 56.9%. Now, as we can see, this is also translated in a lot more net income, and as we can see, net income per share has risen from $1.74 to over $11.9 per share. Again, this is over a 500% increase and just absolutely insane. So Jensen talked about the recent success of Nvidia in the latest earnings call, and this is what he had to say about Nvidia and the market. These recommender systems used to be all based on CPU approaches, but the recent migration to deep learning and new generative AI has really put these recommender systems now directly into the path of GPU acceleration. It needs GPU acceleration for the embeddings, it needs GPU acceleration for the nearest neighbor search, it needs GPU acceleration for the re-ranking, and it needs GPU acceleration to generate the augmented information for you. So GPUs are in every single step of a recommender system now. And as you know, recommender system is the single largest software engine on the planet. Now, a recommender system can be seen as anything that we might also call a platform, something like Netflix or YouTube. And even though, of course, AI is incredibly complex, we can boil it down to this. A few years ago, when AI wasn't yet developed, most computers ran on CPUs, a central processing unit. However, with the advancement of generative AI and the evolution of this new form of computing based on machine learning, we have transitioned to a world where GPUs are the most important component. This is the main reason why Nvidia has managed to deliver these results and why it is at the center of the AI market, delivering such high growth and such high margins. Nvidia's GPUs are basically one of a kind, and no other company right now can produce what they're making in terms of GPUs. Other producers like Advanced Micro Devices or Intel can compete with Nvidia in terms of CPUs, but not when it comes to GPUs. In this chart here, we can see the evolution of Nvidia's revenues by segment over the last 12 quarters, going back all the way to Q1 2021. And as we can see, growth really began to accelerate back in Q2 of 2023. This is when the AI hype really began to take off. And as we can see, most of the revenues can be attributed to the data center part of the business. So as we can see, in Q2 of 2023, we saw a quarter-on-quarter growth of 140%. Of course, this has now slowed down. It slowed down to about 40% in Q3, down to about 26% in Q4. And if we look at Nvidia's latest guidance, we should see about a 10% growth in the coming quarter. Nvidia has guided for about 24 billion in revenues for the next quarter, non-GAAP operating margins of 77%, and operating margins of around mid-70s for the remainder of the year. Now, following these earnings, which did even surpass expectations, the stock went up over 15%, now trading at over $800, pretty close to all-time highs. Just realized that about a year ago, Nvidia was trading at under $250. Now, is this valuation justified, and can we expect this to continue? Let's start by looking at Nvidia's actual valuation. Now, as we can see here, Nvidia trades at a price to earnings over the last 12 months, TTM, of around 52. On the other hand, if we actually look at their forward price earnings, it comes in at 31.37. Now, what's interesting is that this is actually very much in line with some of the other high-flying tech stocks that we have seen rally so much in the last year. Apple, for example, trades at a forward P of 28, and Microsoft actually trades at an even higher forward P than Nvidia at 34. Furthermore, the stock is actually pretty well priced if we look at the price earnings growth, which looks at the price earnings in terms of future earnings growth. Now, as we can see, the PEG for Nvidia is 0.40 and the forward PEG is 0.76. However, it is true that the stock is very expensive, even compared to some of its peers, if we look at other measures of value such as enterprise value to EBITDA, where Nvidia has a ratio of 74, or price to book, where it has a ratio of over 50. So again, there's an argument to be made here that Nvidia is quite expensive. No doubt it is trading at a premium valuation, but actually just looking at the forward PE, this is kind of in line with some of the more high-flying stocks. But here's the real question. What can we expect from the AI market moving forward? Is AI really a revolution, or are we just in an AI hype phase? And to that extent, can Nvidia keep growing at the rates it has been growing, and can it preserve its premium valuation? Or, on the contrary, is Nvidia due for a big correction? Now, in order to look at the future, it's good to look at the past. A lot of comparisons have been made between today's AI tech mania and the kind of euphoria we saw in the stock market and excitement that we saw around the internet in the dot-com bubble. Now, what happened back then? Over the 1990s, the internet began to grow in popularity. As a result, we saw huge investment in internet-related companies, and stock valuations of companies that operated in the internet began to pretty much just go into the stratosphere. As we can see, the NASDAQ climbed to record highs by the year 2000, only to eventually come crashing down. Now, basically, investors got a little bit too excited with the internet and they got a little bit ahead of themselves. One clear example of a company that should have never been worth as much as it was pets.com. This company made about 619,000 in revenue in 1999 and spent over 11.8 million in advertising. This was a company with no earnings and it had a completely insane valuation. However, this is not the case with Nvidia. As we know very well, Nvidia is delivering in terms of both earnings and growth. It is growing revenues at over 100%. It's doubled its revenues in the last year. It is expanding its margins, and it's just obvious to anyone who looks that there is no competition right now for Nvidia. With that said, there is a stock that is comparable to Nvidia in terms of what it's achieving right now. A stock that is still around today, and though you may not know this, was at one point the most valuable company in the world. That stock is Cisco Systems. Now, as we can see, Cisco reached $80 on March 27 of the year 2000, becoming the world's largest company and trading at a price earnings of 220. Now, again, this might seem like a lot. Even now, compared to Nvidia, it's a lot. But just think about it this way. It was the new age of the internet, and the Cisco switches and routers were the literal bridge to this new world. In other ways, Cisco was basically the infrastructure needed to access the internet. Doesn't this story sound familiar? Aren't Nvidia's GPUs exactly what we could call the infrastructure that we're now using to access AI? I think this comparison is pretty valid. However, as we can see, the stock lost over 80% of its value and has actually never reclaimed those highs, trading today at close to $50. So what happened to Cisco exactly? Obviously, the internet bubble died and Cisco's revenues must have plummeted. Well, that is not what happened at all. Though the internet hype did die down, go ahead and look at Cisco's revenues. Cisco's revenues did peak in 2021, and they did fall the next year, but then after remaining flat for another year, they actually continued to grow. In fact, Cisco's revenues have gone from 12.18 billion in 1999 to over 50 billion in 2022. Now, to anyone looking at this chart, calls Cisco a success story. I mean, the company has managed to continue to grow revenues over the past 2 decades. It's still profitable. But nonetheless, if you actually look at the stock price, it completely plummeted in 1999 and hasn't even recovered to the levels it was. So what exactly did it take for Cisco to fall apart? All that it took really was, yes, the realization that the internet was not going to change the world as fast as people expected, but namely, just a slowdown in revenue growth. As we can see, leading up to the year 2000, Cisco's revenues were growing almost exponentially. From 1999 to 2000, the revenues went from about 12.18 billion in 1999 to over 22 billion by 2001. After that, however, revenues fell and the stock price just plummeted absolutely. So my point here being, could the same thing happen to Nvidia? Could both bears and bulls be right about Nvidia? Perhaps Nvidia will continue to grow revenues and be at the center of the AI revolution, and perhaps simultaneously, its stock price could plummet from these levels today. While this is obviously just a fun comparison, it is interesting to see the overlay of Cisco's stock price compared to Nvidia's recent run-up, as we can see here. So, if Nvidia is going to go the way of Cisco, all that really needs to happen is for its revenues to slow down. So let's go ahead and look at what I call the AI headwinds. These are 3 reasons why we could see Nvidia's revenues slow down. First off, the company's own guidance. If we actually look at the last quarterly revenues, we already see a slowdown, and the company has already projected a 10% increase in revenues over the next quarter, which again is a significant slowdown. So comparables with the previous year are going to become a lot steeper, and it's going to be a lot harder to justify a premium valuation. Now, there's a lot of reasons why Nvidia can't just keep doubling its revenues. Supply constraints, which have been talked about a lot, are a key reason. But another important reason is competition. There's currently a huge demand for Nvidia's products, and as a result, they can charge very premium prices. But this is, of course, bad news for a lot of Nvidia's big clients. Who are Nvidia's big clients? Well, some of the other magnificent 7 stocks. Google, Apple, Microsoft. So Nvidia's clients are also perhaps its potential competitors. And we're already seeing all these companies begin to gear up and develop their own alternatives to Nvidia's chips. Tesla is developing the Dojo supercomputer, which runs on its in-house produced D1 chips. Apple has developed its M3 series. Google has released its Cloud TPU version 5P, which is an in-house AI accelerator. AMD, of course, is soon releasing GPUs that could be comparable to the Nvidia RTX 4080. And Intel, which is of course developing its foundry infrastructure, that means infrastructure where it can actually produce the chips, not just the software behind them, is now teaming up with Microsoft in order to develop their own computing chips. Now, I know a lot of people say that it's impossible for these companies to compete with Nvidia's GPUs, that they're too advanced, but I think this misses the broader point that these companies don't actually have to compete with Nvidia and produce a better product. They simply have to produce a similar product and at the very least use it themselves at a much cheaper price. And there's a big incentive for these companies to do this, as Nvidia is charging them so much for their premium GPUs. On the other hand, I believe we could soon be running into an oversupply and demand downturn, which would create an imbalance in the market. First of all, in terms of supply, it is important to note that chip manufacturing has always been a cyclical business. Go ahead and look at this chart. As we can see, worldwide semiconductor revenues has trended up over the years, but if we look at year-on-year change, there's a clear up and down cycle. Now, semiconductors are very reliant on production, and basically in times of high demand, prices go up, this incentivizes investment, and it leads to more productive facilities. As these productive facilities all come online, it increases supply, reduces the price, and creates this kind of boom and bust cycle. Now, there's an argument to be made that the revolution in AI is going to smooth out this cycle, but nonetheless, I do think that eventually we're going to get an oversupply of chips. Now, this oversupply won't only come from the fact that more people will be producing these chips, but from the fact that demand could probably tamper down from here. As we can see here from the VC funding, the AI mania has reached a fever pitch levels. VC funding reached 50 billion in 2023, and it's likely going to reach new highs in 2024. There's a flurry of AI startups popping up, offering free AI systems, and it's only a matter of time before just offering free AI systems doesn't cut it. Eventually, they're going to have to begin to charge, and at that point, we'll begin to see just how useful these apps are, and just how many of these companies can actually survive. Now, there's nothing wrong with new startups coming up, but this is what we know as creative destruction. The market invests some money into speculative AI ideas. Some of them will work out and some of them will not. But again, eventually I do believe that we'll see some of the hype around AI die down, and this will obviously put a dampener on demand. Lastly, there's another important consideration that we have to take into account when it comes to the future of AI, and that is what I would call regulatory and ethical concerns. Now, for starters, the big appeal of large language models is the fact that they can take a lot of data and use it to learn, develop models, and basically distill this information in a useful way. But who owns this data? Do large language models really have the right to take all this data? Well, a lot of people would disagree, and in fact, the New York Times recently sued OpenAI for copyright infringement. So again, as we move forward with AI, I think this is definitely going to be a key headwind for the AI industry. Who owns this data? And if you can't just train these large language models on all the data that's out there, then what really is their use? On top of that, of course, AI could pose a significant threat to humanity in terms of how it's going to interact with our security systems on the internet, and even in terms of how it can threaten our own existence. For the first time since the invention of a nuclear war, we're in front of a new technology that we don't fully understand, which has the capacity to potentially destroy us all. With that said, governments are going to have to talk to each other and really try to understand what the limitations are when it comes to AI and what you can do and what you can't. Now, this will definitely, again, put some limits potentially on what can be done and even who can use AI technology. Again, these are just a couple of potential headwinds and concerns that we could have moving forward. Lastly, in terms of the current market, of course, a big concern for Nvidia is still China and the Chinese market. As we know, China and the US are currently in an AI arms race. Everyone is trying to get to the AI holy grail, to the extent that Nvidia has even been forbidden from selling certain chips to China. So not only is that hampering Nvidia's revenues, which until recently were very heavily dependent on China, but it of course also really incentivizes the Chinese and other countries to step up their AI technology. So to sum up, is AI a bubble? I don't think this technology is a bubble. I think what we're seeing is similar to what we saw with the development of the internet. What we're simply getting is an overhype of the current technology. I think that we're seeing all the potential that AI can do, but it's still going to be many years till we can realize it. This can actually be portrayed in what has been labeled the Gardner hype cycle, which explains how new technologies tend to be adopted. As we can see, when a new technology is developed, there is first of all a peak of inflated expectations, which I think we're getting to today. This is followed by a try of disillusionment, then a slope of enlightenment, and a plateau of productivity. Again, kind of what happened with the internet. Big bubble in 2000. People then went on to even say that the internet actually was never going to be a thing. Of course, that was wrong. And slowly but surely, the internet became ubiquitous in our lives. And still, a lot of companies in the sector made tons of money. Big example of this is, of course, Amazon. With that said, is Nvidia itself a bubble? I think Nvidia is reaching bubble levels. Now, I think the Cisco comparison to Nvidia does hold some ground. But with that said, it is true that Nvidia, for the time being, is trading a lot more reasonable valuations that Cisco did back in the early 2000s. Nvidia's valuation is comparable to the likes of Apple and Microsoft and some of the other big tech names, so I do think we could have some runway before the Nvidia bubble really pops. Again, this is just my opinion. I do not hold any stock of Nvidia anymore. Unfortunately, however, I'm not shorting Nvidia either. Again, I agree that it's both a great company, but also that it might be dangerous to invest in it right now. With that said, there's plenty of other interesting opportunities in the AI sector, and that's definitely something that I plan to look at in the coming videos. So if you like this type of content, stay tuned, subscribe, and remember you can also follow me on Substack, where I write about the economy, macro, do technical analysis, and even share my portfolio there. Thanks for watching, and I'll see you in the next one.